What's up, everybody? We're going to quickly run through this. I think, this time of day is probably tough for people, but I think having the recording is going to be just fine. And we'll do another class Tuesday night at the latest. Normally, the idea is to do Tuesday evening and Thursday evening. And then if we do one on Saturday or Sunday, it can be something in between. Eventually, the idea is to get live on YouTube and Twitch for at least like a couple times a week, separate from what the internal classes are. So, there's a lot going on the plate. Hopefully you guys are being patient with the Discord. I have somebody actively in creating. He's basically, he builds Discord. So he's not going to remake this one completely, but we're going to basically give it a new fresh look, consolidate some of the areas that need consolidating, just going through it, adding the right bots that help people out, and we'll go from there. So I'm really looking forward to it. I think it's much needed improvement. So a couple things to watch with the 10-year here, right? So keep in mind, as bonds drop, yields go up. Okay. So what's been happening here, bonds have been tanking. If you look at like the actual bond charts, normally we watch yields. That's what I do, at least. US 10Y is the US 10-year. You can do the 30-year, you can do the 5-year, you can do the 6-month. You can literally look at a whole bunch of them. You can look at the correlations between the two. That's not really what this video is about. I tend to watch the 10-year overall. It's been perfectly fine as far as what am I trying to say here? As far as giving us signals, right? So with this said, this line doesn't even matter anymore. But what did we have here? Weekly supply here, going back a really long time, right? You have to go way back here. Oops. Come on. Anyways, you have to go all the way back the next level, right? Let's see. We had to go back to here. That is 07, right? So last time we saw moves like this were, pretty much the end of 07 going into 08. The next real zone, I would argue, is probably up here near 7 or 4.8%. And that's going back to, what is that, June or July of 2007. So, we're at levels not seen for a long time. So what have we seen here? We saw weekly supply and we saw that hold up, right? It tested here, rejected, tested here, rejected. But obviously, once we have this kind of wedge breakout, obviously, this is a technical analysis. There's a lot of ways to look at bonds, treasuries, yields, all that shit, right? So thing is, though, this is breaking out. What happened? We finally got a weekly close above this supply zone 2 weeks ago, right? Last week, this previous week, we retested and we closed above. So it'll be really interesting to see going into this week whether or not this continues to the upside, or if something happens where it steps in. I'm starting to think that we'll see this kind of chop along above here and continuously kind of move up. The next major area I would say is 4.5%. That's a big kicker. I have an alert here that's very important. I'll let everybody know, obviously, as things go off. Let's look at the daily real quick, because what do we have going on locally? So this was our daily demand, right? Last week, we got a big move through that, and we've come up and we've actually retested it and rejected that. We've rejected that quote unquote retest. So keep that in mind, right? What you don't want to do is, keep in mind the weekly is probably the most important over top, of the daily. But what we're seeing in the daily is that maybe we see a pushback down, right, to this, keeping it above 4%, I would say. Possibly we see a pushback down, and then we see a base and a real move to the upside. That is very well possible, especially leading into the next FOMC. Remember, a lot of this is affected by what the Fed does. Although, with that said, keep in mind this weekly chart. Anybody that knows the zones or understands like what they're looking at here, which, I mean, even if you don't know the zones, you should be able to tell, like, this is this is above, this is supply, where we have rejected and it's played out, and we've rejected and it did push down, but it held, obviously, and made a move back up. This is demand down here. This is not the only demand. There is demand sitting right here. That is what we came down to and bounced out of. I mean, if you guys really want, I can put it in here. And again, why is this demand? It is demand because, sorry, hold on a second. I'm going to make it that dotted line just so we know that it is not a major area of where we expect So remember, because this is like the opposite of what happens with the bonds, it's actually where sellers are expected in the bond markets, right? So if price came back down, that means bonds are rallying, and then we would expect sellers to step in here. Even though this is a demand zone on this chart, it's truly a bond supply zone for bonds. So, and that's because bonds, when bonds go up, yields come down. It's an inverse correlation. Anyways, my point is that this has worked multiple times. Anybody that says TA is bullshit doesn't know what they're talking about and doesn't understand liquidity zones, I guess you could say, right? Liquidity dynamics. Or they're just talking shit because it never worked for them and they've, fallen back to fundamental investing, which is fine. That's that's why I do that's literally why I built the Discord, because I know there's so many people who don't understand like what we're looking at when we look at these charts. Like, and it's something I want to work on more. Oh, make sure you guys want to see something in these classes, or if a better time works for you, let me know. DM me, tag me. Not a big deal. Like, don't get angry at any of that stuff. I'm happy to kind of get the feedback and cater as much of this towards, you guys who are active. I mean, there are a lot of people in this Discord that just aren't very active, and that's fine. They probably, they watch the classes, they get information from it as we post, and that's, totally fine with that. But if you are active and you want to see something specific, please let me know. So, all right, enough with that, with the 10-year, but I do watch that. We'll keep an eye on that big time. Actually, I'm going to bring that back to the daily. Put that up. By the way, this VX APL is the Apple VIX for what it's worth. I haven't gotten a lot of use out of it, but I do watch it a little bit during the day. And with the VIX, I'm not going to even go into that too much, but with the VIX, we see, we've had this kind of move up, a retest. We'll see what happens with that. The DXY, I do want to talk about just briefly. We had two things going on here. We had this trend line breakout, and you can see this breakout is confirmed. Once we got a daily close above this trend line, we did not get a close below it. It held and it pushed up. Now, the major supply zone is this one for now, and then this one up here. This is major as well. But for the DXY, this is a major daily supply zone. So far, the daily pushed up into it and closed below it. Okay, last time that happened, okay, we saw, multiple days, almost, a week and a half worth of attempts to get higher on the DXY, but we could not get a close above, or I should say inside of the zone. So again, that's 104 spot 297. So keep an eye on 104 spot 3. You want to see a daily close above that, in which case, we can expect SPX to possibly come down some more. In general, again, these are daily candles, you guys. A lot can happen intraday. But if I'm starting to see 1 or 2 or 3 days close above that 104.3, 104 spot 3, then I'm probably not going to be looking for too many longs, right? At that point, I'll say, okay, it looks like the DXY is probably going to head up to 105, possibly this top of the zone. The next signal I would look on the daily is this 105.615, right? So 105 spot 615 is the top of this zone. And once price got up to here, if it gets up to here, we'd want to see a daily close above to think it might go higher. So again, that's just, that's how it works out with the zones. That's what I would watch with DXY. This could easily reject here and come down. These trend line breakouts, in my opinion, I mean, on the daily, this is definitely one that has held well. The price action has gone around. It's working. But I'll just say that this is like these fail a lot of times. So I'm not putting a ton of weight into it. So, all right, that's enough with that. Not going to spend a ton of time on, I guess, the markets as much. I'll save that for when people are here because I think questions are probably helpful. Let's just look at one thing here. This is the US 500. It's the price action of the futures. It's basically the same as what I watch over here, SPX 500 USD. All right, so if we click on the 4-hour here and just kind of zoom out, we want to take a look overall at what, maybe what's happening here just in the short term. And without knowing the supply or demand zones, right? Although you should, because I can show you right here why. But let's just say, like, I know that there's an area of support down here, right? So even if you're just taking this and you're going, and you're doing something like this, and you're saying, look, that's my demand zone, okay? Nothing wrong with that at all. You know, what, I don't care what color you color it, even if you just make it gray. I mean, honestly, obviously, I don't care, but you know, it doesn't really matter. You guys can post charts like this saying, hey, you know, what am I seeing here? And honestly, I grabbed that all right here, guys. I grabbed that, boom, here, looking at this. But look where we retested. I mean, look how perfect this ends up looking. This, you know, there's lots of ways to be bullish, like looking in this market. Now, could this be a head and shoulders setup? Yes, absolutely. But a lot of pullbacks look like that until they aren't anymore. So what are we watching? We're watching a general demand zone, right? I would call it a demand zone. I'm not calling this just a support zone. Support is kind of the bottom of the line, but I know that there's going to be buyers inside of this whole zone. That's why it's so important to have two levels, right? I don't care what you call them. I call it, you know, a demand zone with support on the bottom. Sometimes you'll hear me say, hey, we found support at the top of the demand zone. Doesn't matter, right? There are specific ways that I talk about the specific zones, and I'll show you real quick why. Actually, we can keep this zone up, why they work as well, right? So if we're looking for, imagine price is coming down here, okay? And we're looking for the lowest bearish candle close, okay? I would come down here and I'd say, okay, look, this guy stands out here. So let's mark it. Let's mark the body of that candle, okay? And I'm gonna mark it yellow because that's what I tend to, that's what I make my 4-hour zones. All right, shit, that's why it's not working. And I always have the magnet on, you guys, so that it snaps to the body of my candles, right? It'll snap to the high, low, you know, open or close. So there's what I would call, right, a specific demand liquidity zone that I know specifically this is where buyers are going to be overall, okay? And look at how the price played out here. As soon as we dipped on a 4-hour candle inside of this, buyers stepped in, bought it right back up. As soon as we got the drop on the next candle, right? This is a 10 a.m. candle. So this happened at pre-market, right? You closed 6 a.m. here. This 10 a.m. candle, this dip probably happened, you know, it might have happened pre-market, but into the open, and boom, we've smashed up. If you're watching this, okay, in the morning, and you see buyers step in and it pulls up and it closes above, and the retest doesn't even technically retest, although, again, remember that liquidity is sitting, right, pretty much at the hole of this candle. So like technically that bigger square there, rectangle, is where the liquidity is. The thing is, I'm not going to get a signal from that whole area. I'm looking for a signal off of the body. That's where we get the precise signal. That just comes from, you know, years of experience and really diving into this metric. So with that said, you know, we saw the buyers step in here and boom, rallied up. Do you have to use these zones? No, you don't. It's just become a focal point that works really well for me intraday, right? Now, obviously, you know, could we say that it was definitely coming all the way down to here? Well, no, not initially, but imagine price. Let's just do something real quick. Imagine price is here, okay, coming down. Where are our demand zones? We know that there's a demand zone here. We've identified that because look where it wicks down to. If you go back, the next most recent candle is a bullish candle here. We're not inside the body of another bearish candle. The next one wouldn't be till you get down to here. Okay, so I know that this is demand. All right, so what's the next? If I'm going up from here, right, the next lowest closing bearish candle is from this candle right here. So let's mark that. See what it looks like. Right? Okay, now we have that. And you can see how it was retested from this right here, this guy right here, right? This candle right here, this wick comes down and retests that liquidity. It's very important. The reason, so let's watch, see what happens. Okay, where's the next one? Next one would actually be right here. So let's snap lines on this too, just for shits and giggles. It's going to be the bearish candle. Right. And I would even argue that this is more of a retest of the supply that was here, but for what it's worth, doesn't matter. Right. And again, we're not using this gray candle here. These are just demonstrating. So let's see how this plays out. Okay. We're coming down and you almost tested the body, right, of this zone here. Got to push up. So our buyer's going to sit there. You don't know. Let's see where it goes. Yep. Buyers would have been there for a short-term play, and then boom, you get smashed down. But it holds, right, until it doesn't. Oops. Let's just keep moving. So here's the thing. This is a good signal, right? You do have a little bit of support here. I would always say that this is more the demand zone because it was retested here. This does count, but again, this is more, I'm not going to get too deep into that. This was more of just a retest of this breakout. This represents where buyers really did step in after just a slight pullback. That just, doesn't really matter. They both count. But once we got this smashed through and we got a 4-hour close below the demand zone here, these are all become technically invalidated. The key here is that this thing slams down. We close underneath. We know that that's a bearish signal, okay? Once we get the close underneath. Now, intraday, it's tough to do this. Obviously, a 4-hour, you're not going to be using that as much. But the point here is that swing-wise, we can say, like, okay, there's a higher probability we're going to see lower prices. In this situation, it did work out. It doesn't have to always, but look at that move. Obviously, came right down. And that's where it tested this obvious demand zone. This is the, you can say this is strong demand, but like this is obviously, kind of the bottom of the range. When we see prices test like this and bounce back up, I am looking for a buy. That's where you want to catch knives. It's hard to do that. It's hard to catch a knife here if you've gotten stopped out 15 times on the way down and you're losing money, death by 1,000 cuts. So I just want to throw that in there. That's how we use these zones. And once we caught that bounce, it closed here above. That was the bullish signal. And upon the retest, which it didn't get quite all the way there, but it pushed down enough. That's kind of your signal to buy. And maybe you buy in as low as you can, and just set your stops below the zone. That's the best way to do this. So you can use this chart whether you're trading SPY, even SPY, SPX, any of the ETFs, the leverage ETFs. I would still be using a chart that looks like this, or like my SPX 500 USD, right? That has the majority of the zones. So that's a little bit of a touch on that. I'm not going to go too much into the zones until we have more people that are here. Oh, it looks like we did get one person to show up. So again, this is going to be recorded, or it is recorded. You'll want to check out probably the beginning of it. But let's go on from here to the next thing I wanted to touch on, which is IV. All right. So touching on IV, right? There's a couple things to do here with this. So this is let's just look at SPX because it'll give us, let's look at SPY. All right. So 10DT. There's a couple ways of looking at this. There's two. IV that we're going to talk about is implied volatility of each contract. There's also the implied volatility, right? That's this 15.70%. When you guys are looking for the expected move, right? I'm going to look for Friday's expiration, which at this point is the September 1st, right? That's Friday's expiration. And I'm going to go over to the number on top. And this is 16.2%. Okay, that's the implied volatility for the week with the implied the implied move, you could say expected move for the week of $6.70, basically 76 cents. So that plus minus sign right there, okay, literally means from previous Friday's close, right? The last close, which was this last Friday's, plus or minus $6.76 is the expected move range. So you would add 676 and you would subtract 676 from last Friday's close. That gives us an expected move range. That's the first deviation. The second and third deviation is literally just adding again. If you're looking, from the +1, you'd add 676 to that again, right? And that would give you the second deviation. And if you wanted the third, you would then add 676 yet again to that to give you the third deviation. To look for the lower deviations, you would just subtract it again from, yet again. So you'd start at Friday's close, you'd subtract 676. That would give you the first deviation. You would then subtract 676 again. That would give you the second deviation. And then for the third, you would do that whole step yet again, right? Subtracting 676. So anyways, that is a different, it's the same idea, but it's different than what we're talking about when we're looking at IV. So let's look at IV here. Implied volatility, I have it set up in this way. I tend to like it. Let's see, pretty much like that. Implied volatility. This is intrinsic value, extrinsic value. But again, these you can do this as you see fit. on all, pretty much any broker should have this. Now, some brokers don't have this weekly expected implied volatility for the week, I guess. That tells me, honestly, it tells me that they're more of an investor based brokerage. I would probably look for a different brokerage overall, but again, or just use go into the Discord. We always list them. So, and someday in the future, I may end up having an indicator for that, but it's going to take a while to kind of get to that. So when we're looking at IV here, this is implied volatility for the, for this contract. What you want to watch out for is the higher this gets, this will help drive price up, right? So the problem that we find is that if you go to, it's going to be tough to find one right now, but during the week, right, you'll see these increase. Now on SPY, 15% is nothing, right? But the thing is, you can compare that across the board to what else that we see, right? So let me say, where's my implied volatility here? You'll see that across expirations change. So this is obviously the 1 day. If you look at Fridays, it's jumped up to 16%. And it kind of makes sense, right? There's more volatility to know like where price is going to interact. The thing to watch out for is that as implied volatility climbs, it's kind of it has to do with gamma a bit. It kind of, it has to do with how quickly your deltas move, right? And of course, delta is the representative of your percentage to land in the money upon expiration, as well as how much the value of that increases, right? Per contract increases per share, and each contract is 100 shares. Again, I'm going to have to do more classes just on options, but for now, just keep in mind with implied volatility, when you see this can work in our favor when we buy with low implied volatility and it increases. The key, and what we see during earnings, is that you'll go to buy something that has earnings. And if it's the week of, implied volatility can be jacked, right? Or if it's a meme stock, it can be extremely jacked up. We've seen, we've seen it absolutely insane with some of the meme stocks, in the hundreds. I think we saw like, what was it like? Actually, I don't even remember. I almost want to say like 700% on some of the memes. With that said, that's super out of the range. Normally you see, anything over 100% is almost untouchable. You can day trade it, but the problem is once price moves away from the direction that you want. So if you buy calls and price drops, you're going to see an exponentially sized drop. And that's where the danger comes in, right? Now you can use it to our advantage. If you expect, volatility to increase on something, like if it hits a nice solid demand zone or we've gotten the signal, we can say, hey, I want to buy calls here, because as they start to push up, especially when you're closer to expiration, you will see that change of implied volatility, right? And that's what we're looking for is, we want to kind of catch that bigger move. So again, there's no set amount, I should say, of what is good implied volatility, like what's a good number compared to what's a bad number. And the reason for that is that different stocks trade at different levels of IV just because they are more, quote unquote meme-ish, right? So like Tesla, you look at SPY is 16 point, we're going out to Friday's expiration, right? So 16 and a quarter, one out the money calls, right? So if we go to Tesla, it's already at 48%. Now that's not terrible for Tesla, in my opinion, right? That's not like outsized. And if you look, this is another thing that you can do with IV. Look at one strike out the money, it's 48.92. And if you go here to one strike out the money on puts, it's actually higher at 52.27%. So again, this tells us that there's a little bit more action happening on the put side, right, than the call side for Tesla. A lot of that probably has to do with the fact that Tesla rejected that massive trend line, right? I mean, along with most of the markets, but Tesla had like a pretty major trend line there, going back to, I think, to the all-time highs, and it rejected pretty heavily. So there's still a lot of bearish bias on Tesla. So look for that spread in between the two, because if you see a massive spread, it doesn't mean that puts are going to win out. And it actually means for us, and for me, thinking like short-term trades, I actually like looking then for an option to get long, right? So like I look at Tesla here and think, okay, Friday's expiration, and again, this will change. This is going to change as Monday opens, depending on what the futures do. So just be cautious looking at things like IV, any of the Greeks, honestly, over the weekends. you can get an idea. Definitely study time is good, but it's you really want to watch them throughout the week, because that's when you're going to see a lot of changes to them intraday. So all right, so anyways, what we have here, watch the change in this. If I see a support level come up with Tesla, all right, and I'll switch back to the charts real quick and we can just take a look at that. Coming up with Tesla, let's just say I would rather catch the lower IV, okay, and then play the bounce, because what you're going to see is that IV kind of shift. Now that's really difficult with where Tesla's at, which probably makes sense, right? Like I was saying, you had that, the massive rejection. I don't even have the trend line up here. That was way up here. But after this big sell-off, we've had a bounce. Now you're up near, again, these EMs are last week's. I have to update them. But you're kind of near the top of this range. So, the put side is seeing more action here. The only thing is, coming into the weekend, what's to say if futures don't open bullish and this doesn't gap up, right? And we don't open up, near 244 and pushing higher. Well, guess what? Those puts that people bought with the higher IV, or that now have higher IV, they're going to lose their ass very quickly, and it's actually going to drop more. So definitely something to pay attention to. So, all right, next thing I want to touch on briefly is Gamma. And listen, you guys, you really need to go watch the videos that are in. If you look above where it says Gamma Gexbot, there's a channel that has the symbol Y, which is the symbol for Gamma in the Greek alphabet, right? And it says Gamma next to it. It's a threads forum. If you go to the one that says Gex Explained, right? That's Gamma Expiration or Gamma Exchange Explained. There are 2 videos, and I recommend you watch both of them. You might have to watch them a couple times for it to make sense. It's definitely key. It's kind of like it's like the expected move. I did 2 videos on YouTube, and here's the thing: if you don't have Thinkorswim, then you are going to have to kind of figure out, like, where do I find this on my exchange? The other thing is that, I mean, if you have an exchange like Fidelity that doesn't seem to have the expected move, you're really going to have to look for options information somewhere else. So you can always ask, one of us in here that has Thinkorswim. Obviously, there's a whole list of tickers for the expected move inside of the Discord. Sorry, I'm losing my mind here. And anybody that, if I make this public, just keep in mind, anybody that's interested in the Discord, you can always reach out to me to get any questions answered. Or you can just, check out, you go to tradersretreat.net, it reroutes you to WAP, and you just sign in there. You just make sure you sign in with, you sign into WAP using the Discord handle that you want to join the chat with, because it puts you in there automatically. So, all right. So if you look here, right, where this says Gamma, you come up in here, and this is a thread, right? It's got 2 of them that are locked. So Gex Explained, or this one isn't locked, but this one is, okay? And Gamma Q&A. So if you go to Gex Explained, and you guys can create and chat inside of this. That's the whole point. Like, if you guys have questions on Gamma, start a thread so we can start digging into it, because I'm not the only one with the answers. So, if you have a question on Gamma, make sure you dive in and check that out. These are the 2 videos anyways. There's also a bunch of explanation here, a little bit here as well. But the main thing, right, is going to be this. And I will do some more diving in, but we're going to go over some of this right now, what we see on the Gexbot. But I mean, again, you guys really need to watch these. So a couple of things to keep in mind with this. Let's see if it's going to switch. All right, so these things come out, right? This is what your Gamma profile looks like. So let's see if I can find, that's 3:08 p.m. Yeah. I want to find the beginning of the day. Shit. Yeah, hold on. Just bear with me while we I want to start it at the beginning of the day, and then we'll go from there, because it does make sense. I think once you get an idea of like how, like, what the chart means and where it comes up from, which again, you guys, you really need to damn, am I on a different, they come out every, what is it, every 2 minutes, I believe. Yeah, every 2 minutes there's a new chart. So this becomes a little bit mundane. And they have Gexbot has their own Discord that you guys obviously can go join. It's free. This is free information. just so you know, like this is coming in free. I would like to get the ONSA sand stuff, Anza. I'd prefer to get that, but all right. Anyways, this is what it looked like in the morning. This is a 931. Okay. Now you're not going to see any of the dots or any of the pink right off the bat, because you might see a dot here or there. But normally they're all right here at the base, because what this is showing is open interest, right? So these are strikes that were carried overnight where gamma's sitting. So at the start of Friday, 43.50 was really sitting pretty hot, right? Zero gamma, if you guys watch where zero gamma is in relation to the current price, right? Spot price, as they call that, which is this blue line or bluish green, whatever you want to call it. 43.95 spot 4 in relation to this orangish line here, right, which is zero gamma. That gives you the idea of where hedge pressure is. So if we open right just above hedge pressure, a lot of times you might see a push up, but if you see hedge pressure broken, that's what they're talking about. It gives you a reference to where the hedging pressure is going to be. So if price moves below that orange line, now you know that pressure to hedge is actually, is back up above that. So again, you're going to see it act the way that the guy explains it inside the Gex video. If you look at that first video, it's about, I don't know, it's like 2/3 of the way through. The thing to remember is that this, it's kind of like, what does he recommend? Oh, he calls it the gamma VWAP, which is pretty cool. It makes sense, right? Think of it as like the gamma VWAP. We're probably going to bounce off of it from the top or bottom until that doesn't happen anymore and you break through it, right? It's not exactly the same thing, but again, it does make sense. It's kind of where it gives you an idea of where the hedge pressure is going to sit at. So, all right, so just keep that in mind. That's kind of what it looks like as we open. Here's the thing to remember as it starts to grow. We're just going to jump up a few. All right, so this is later on in the day, or later on in the morning, right? This is 10:52. So what has changed here? The gamma has grown by volume, right? Which is all the that's everything that's happened today. Open interest is what was from yesterday, what was carried overnight. So you can see here that most of this was actually, right? You can see it growing towards the top now. And if you look, you can kind of see where volume these dots represent, right? So this is 1 minute prior, 5 minutes prior, 10 minutes prior, 15 minutes prior, 30 minutes prior. What that's telling you is that where was this strike? Where was the gamma at this strike? So let's look at this 43.50. So 1 minute prior, right? It was back here. Okay. 5 minutes prior, it was back here. 15 minutes was back, or I'm sorry, 30 minutes was back here. And then 15, it actually dipped a little bit. What does that tell you? You start from 30, it decreased slightly, the negative gamma, right? Decreased slightly, and now it's starting to grow again. Or I'm sorry, I guess I have that backwards, but the 30 minutes is this really dark dot back here. But you get my point, right? Use it, look at it in the sense that it's like, look, starting at this dark dot, it shot all the way to this, next lightish, kind of did a little oscillation here, and now it's pushing back out. That tells me that it's increasing, right? You can use that change in increase along with where open interest is or where the high volume's at. And again, you're not going to see pink. These dots represent where volume is going. It won't show pink until it exceeds where the open interest was, right? But that's why you use the dots. You can kind of see. You can see how these 43.60s exploded, right? So that actually became a lot higher than where the open interest was. Hold on. Hey. Yeah, in a minute. I'm working. Oh. Okay. Give me like 10 minutes. Go with mama for 10 minutes. Real life interaction there. 43.60 grew, right? And that means, that give you an idea that, hey, price is out. Now, obviously price is coming down because this, where it shows the price, that spot price at the time. It's also increasing just above. Might show you that things are getting a little choppy, although 43.50 is growing quite a bit. Okay. And you guys can actually put up your charts and go through these. If you want to learn this, the best way is to pull up your charts. If you can't do this in real time, do it, after fact. Pull up your charts and compare it in real, what the comparison was, Friday at this time, at 11:04, and just kind of walk through that replay function, side by side with these charts. that's, you can do that in real time to a certain extent, obviously. But you can also, like look at this here. This shows you at, let's see, so get the right time here. This is at 11:12, right? Look what happened here. A minute ago or 5 minutes ago, it was all the way out here, right? As spot price started to move up, you see this negative gamma decrease. All right, because where is it 1 minute ago? It's way back here. It's hard to, and we don't even know where the volume is at now inside of this. We just know that this is decreasing. So again, this is not as useful a tool as the Anza are, but far as I know, they still haven't come to an agreement on whether or not they are willing to have it go into this Discord, or they're not doing it to anybody's Discord. It would be a total favor for me to be able to get it in our Discord. And they may just decide against it, and that's fine. But it's not as good of a product as Anza stuff, but and anybody willing can obviously go over and join Sand's program. It is, it is expensive. It's another, it's another Discord. It's definitely not cheap, but the products are good. But again, I use this as a tool in conjunction with all the other things. So hopefully that makes sense, you guys. I'm happy to go over these more as people join, but keep in mind, go to where it says Y Gamma, right? And put your questions either here in the Gamma Q&A, right? Check these out. Like, you can use these, or you can create a new thread and post a specific question. If you have something that you want to, that you found, hey, I found this information on this, create a new post, right? It'll create a new thread, basically, a new forum question. And I'm happy to discuss things inside of that. That's the idea. Like, these don't show up on the left side if they haven't been active. But the thing is, these do stay, they're all historically here. So, all right, I'm going to let it roll on that. I know, we'll go over these more often, of course. Hopefully people check out this recording. I'm happy to do, just looking here. I don't think anybody else really tagged me with anything, but yeah. So keep that in mind. We'll obviously dive into the charts a little bit more. Yeah, and if I make this video public, you guys share this around for me for sure. You want to check out the Discord. We do a lot of stuff, every week. Normally our classes are Tuesday and Thursday evening with something else on the weekend. I haven't been in that schedule 100% yet because I'm trying to get the Discord kind of refaced and updated. So that's looks like that is happening 100% now. Should be done. I don't know. Hopefully this week we'll be able to wrap it up and actually implement all the stuff that's happening in the background. So, all right, take care, you guys. Hopefully this was useful. Post your questions. Feel free to tag me. We'll do another one of these. And yeah, check out, make sure you watch the whole thing, kind of check out the different areas, and if you want to dive into more, use the stuff, use the channels inside of the GexBot, and inside the Discord, the GexBot chat, or the threads, I guess you could say, forum. But also just tag me with questions are always fine too. So, all right, take care. Hope everybody's doing well this weekend and enjoying it.